Good afternoon and welcome to today's closing stream. We're getting on a little bit early so we can prep and get ready for some Jay Pizzle out there today. We can listen to him if we would like to. One thing to understand about today is you are going to see every single FOMC day when you look at 1 minute charts or anything like that, you see a lot of rip around kind of behavior. This was started slightly before the actual release. Then we got the rejection from the center of the zone right here. And that is really what tipped us over. And we were acknowledging the fact that we needed to maybe come all the way down to these previous areas where if that breaks, you're kind of at risk. And now we can see how they might reach down and fill that gap. So still at this moment, if you're being patient, you're staying away from today's volatility. That's right. We know that these events have extreme volatility, and you can see one reaction, see an opposite reaction, see a sell-off the next day, see it go in the actual trend move starting off a couple days later, okay? So we're going to be watching these kinds of things, really paying attention to this zone if we're able to take it back, and then be looking for some things. But at the same time, sometimes days like today, the best thing you can do is sit out, and take into consideration where I'm at for me just yet. Just yet. That's why I think position sizing is a very, very good thing. I think that down in these type of areas are where I will potentially even add to position. We'll see at this point. I want to see if it shapes up some kind of turnaround even on the shorter time frames. But looking at the 30-minute, we're probably going to see this thing rip back and forth. We really need to get through the talk. As of right now, it seems they are projecting higher. I believe the statement that really probably freaked people out is this one right here. Fed risks of higher unemployment, higher inflation has risen. I think that's the statement that's probably going to really dictate stuff for now. And then we have to see if, what's his name? Powell can really settle things down. But as of right now, you are still in that 2-hour downward move. As of right now, the Bears have done what they need to do. So if we're not able to hold up in the top end of this and you see it go down, it can go down to these type of levels. The risk just starts to add up higher. Roll, right? We keep seeing those rejections, unforeseen things start to come out. That's what I'll be paying attention to the most here. But for the time being, if we take into consideration the volatility that we're going to expect here, a lot of the time the first move can be the wrong move, okay? A lot of the time the second move can be the wrong move, and a lot of people like to just sit on their hands, let things digest, and then make a decision later on, because most likely after, if we get some whipsaw kind of things going on in here, which overall, the statement of sideways is bad, right? Sideways here is bad. You wanted to see this come up to key levels so it can kind of bounce through these areas. You didn't get that. You got sideways, which means a lot of the time bad. The 5 minutes showed you the rejection right here. Fantastic look to it. Doesn't mean I sold any position here, right? My position size is perfectly fine. Was able to grab some stuff down in these type of levels. But we'll see. As of right now, not hitting a daily expected move. I am going to start getting Jerome Powell up here in about 13 minutes. Welcome back. How's your guys' day going? Bot Google calls, getting spanked. I picked a bad week to quit sniffing glue once they got below the weekly time frame. Yes, Google did have that kind of crazy type of move. Notice Google able to fill both gaps before this big event. That is massive. That is actually very, very cool. Judging by what was going on here. Yeah, that gives us the gap fill. Take wick. For Google right now, came down. I think more so than not, your weekly expected move should help you with this. For Google right now, you did get these peaks above. It's a very, very good thing. Now, that did add up to what? A complete wipeout failure here, right? A complete failure here. But retesting into this level, pay attention if this is lost, or if you start to see that bounce and roll, or even bounce up and roll back down. That's probably what I'd be watching for. But for now, it would say, you know, that a lot of the times they use days like today to put out things like this, so then they fear people out. So I'm very hesitant to be like, oh yeah, this is going to plummet on such an important day like today, when you just got the potential news, the potential actually good news to come out there if it's not a lie. So hard to figure out what's going on. Today's going to be one of the hardest days to trade. Yeah, we should have more talked about that this morning. But yeah, if you're not prepared for a whipsaw kind of day, degens could have a hard time. But degens can make a lot of money today. By degens, I mean, you know, 1 DT, 0 DT. So it'd say if I have a trade here, and let's say I want the first reaction. Okay, I buy the first reaction and say we're going to see that opposite reaction now. Still looking for you haven't even hit a daily expected move yet. But for the time being, you would just say, okay, well, if this is going to be the first reaction and we're going to kind of whipsaw, right? Because that's what happens during, at least not on the 30-minute time frame, right? On your like 1 minute time frame, right? I've looked at enough 1 minute charts on FOMC days to know that this thing just goes kind of ballistic at some point, especially when he starts talking. People literally will buy calls here once he comes out and talking if he's wearing a certain color tie. So just take that into consideration. On the 100 tick chart, well done, Nels. Good luck to you, buddy. But you gotta be quick with it. You can make money with it for sure. I rode puts to the downside for SPY, 20% for the day. Not bad. Pretty damn good. Yeah, the sideways was a pretty good hint. And then this right here, right before the event, that right there. It did peek its head above, so I think we want to revisit that level. That's why I'm kind of like, watch out for the whipsaw. This kind of tells me like, hey, you know, we peeked our head above here too many times. You did get the lower high here, though. Oh, baby girl's crying. But yeah, we could look at the shorter time frames if you guys would like. The more important thing is just, does a whipsaw shoot you up to here, and do you see it peek its head above the middle, or even peek its head above the previous high? That would be massive. Sorry about that. Bruce had to come downstairs. He got in trouble. So if you're saying things like this, I mean, I would more so be. I would more so. Let me do this, by the way. Oh, let me get this up. I would more so focus on things that you can control and you can foresee. Here's the thing about a statement like that: dollars for trading. What if, I'm guessing that's if, what if job numbers come out much higher tomorrow and the Fed says, well, we better cut rates after all? One, you have one of the least reactionary Feds, I think, that you've potentially even ever had, right? They just sit back until they wait till the brink of something a lot of the time. Two, do you have any way of finding out that jobs number before it actually comes out? No. After you get the jobs number, is it hot? Like, I'm pretty much what I'm trying to say to you is, does it really add to your trading? Like, does it help you to really think about that? I would say no. I would say potentially no. It doesn't really help you to try to figure out or try to best guess the next thing and act like that's. Most of the time, what happens during these events is they try to get you to do those things. They try to get you to guess. They rip it down. Then you say, oh, my guess was wrong. Then you sell it. Then they rip it up and you say, oh, crap, I would have been right. And then you chase the move and you buy it. And then they actually pull it back at the end of the day or going into tomorrow's open. And then tomorrow's open convinces you to sell it at the low again. And then you actually see it rip to the upside and actually see the real move after we find out what China and the US are talking about. That's how I've seen it. Some people, yeah, it's not the same ever. Okay, you've almost never seen these type of tariffs. If you have seen these type of tariffs, they're doing it in a way that's never been seen before. Okay, this is back trading. This is looking at the past and saying it has to be the same. People trying to call rate cuts are not paying attention to the fact that most likely, like I said this morning, I think maybe if everything goes perfect, you get like maybe 2 cuts later in the year. I'm talking like fall. As far as it goes right now, if someone is saying rate cut, rate cut, rate cut, and squawking that to people, really just oh yeah, rate cut, rate cut, rate cut. Don't get caught up in hopium. Pay attention to what's actually happening. Just note that that's not reality. Someone telling you what could happen if this, and this happen is fine, but to trade based on that information is not fine, in my opinion, because what if a bear came into your house right now and ate your laptop? You have it's very the market will tell you about an unknown thing. The market will tell you about something not priced in. The way that the market will tell you that something is not priced in is by showing it to you in the behavior, right? We are doing bullish things, but the behavior here is saying we might be at risk of something bad. We see the stairs stepping down. We built a bunch of liquidity. We get the first reaction. If that reaction is wrong and we snap this way, guess what? The bear thesis, or the way that the bears take back control starts to die down. Even if you do this and come all the way back down to here, just because you did this, it starts to die down dramatically, unless you see us go down deeper, right? Pay attention to things that actually right? Things like this. Maybe you snap back a little bit more into the week, and then you see that drop down, and you just go, okay, well, that's trend continuation, right? We're probably going to break that low at that point, and that would mean that you would be correct in saying like, hey, bad things are here. For now, I think the market is still looking for the excuse to go up. Let's not take out of our pocket last night, right? Let's not take out of our pocket that this happened. Now you have made a new low here, so you're going to have to beat this high pretty confidently, and then you're going to have to carve out a higher low over in this area most likely. If you can see a massive reaction, then you'd have to see this, but I don't think you're going to get this. I think you're looking directly to here. You might ping pong, and then you might end in that upward direction, but this is all theoretical, right? None of this is in the cards just yet. We've seen more of the bear things play out for what price has given us right now. But pay attention to the things that actually are in reality, guys. The reality is, you got good news last night. The reality is you're getting a bad reaction right now. The reality is the bears have been showing you that there might be something bad, but you haven't gone to the critical levels and seen the price action do the thing that tells you it is bad. Let the market tell you. Let it prove it, right? Stop, we can't be... If I traded based on everything I think, I would have lost all of my money by now. I can tell you that. Because I think a ton of things, right? But yeah, to focus on a what if, you're going to miss out on something. Whether it's the structure to the downside, whether it's the structure to the upside, whether it's overreaction because you're in a volatile moment here. Every single FOMC day is pretty volatile. Yeah, focus. Hindsight's always 2020. And that's actually a good thing to say. And I'm sorry I haven't read. A lot of the other comments that you've stated. I just really wanted to get it down. Focus on things you can control. I'm going to tell you right now, if the Fed just told you they're going to keep rates the same and they're downing the estimates from 4 cuts to 3 cuts now, are you closer to getting a rate cut or further away? You're further away. And we talked about this morning. Let's make this make sense while we have crazy volatility. We can look at a 5-minute chart and see crazy degen things happening as we probably snap up to I'm assuming a whipsaw, unless this is just down. we beat this, we peek our head up here. I think you're pretty set on looking at 566. We'll find out. We talked about this morning. Why would it be really, really bad for the Fed to cut rates right now? Why is that pretty much like almost 0%? I think it was 3% chance they cut rates today. 3% chance. So if you got that right, you'd make a lot of money. But is that very probable? No. So, you know, position size. The reason that's really bad is because you still will get an influx of inflation, whether the tariffs go well or not. You most likely will see inflation. At least a one-time thing. It won't be sticky. It will be transitory. Don't, you know, this time Jerome Powell's actually getting it right. He's like, it will be transitory. He's correct. It should be a one-time inflation spike. But even with that inflation spike, we said this morning too, with that inflation spike, if during that moment, right before, even right after, you cut rates dramatically, or like you just give a rate cut, that exacerbates the inflation. That extends, that allows that pump in inflation to go even higher. So cutting rates right now, talking about cutting rates is kind of just, it was on the table at one point a few months ago for May. It's not there right now. We haven't seen anything go through with tariffs, so you can't say it's there, right? It depends. If they cut rates right now, people would think of recession too. Like, add that in there as well. Right now would be like the stupidest time to cut rates. You have tariffs that are causing potential inflation with certain goods, and you cut rates, that gets worse. You're going to have growth with inflation. That's worse. Watch for the rejection here for a retest of the low. Again, that would be nice. And then, shoot, sorry, I'm trying to get it all right in my head because I don't have anything written down for this. We're just talking about it. And then I look at the price action. I'm like, watch out. This is where we can reject from again, right? Anywhere below that center dotted line for this block. Yeah, I guess we'll just stick with that point, though. It's just this, it doesn't make sense. The other thing that didn't make sense, right? Tariffs, okay, we could see the influx, we could see the exacerbation of inflation, but also, what have you been talking about throughout this entire downturn? Everyone's worried about a recession while you price in the potential recession, by the way. Everyone's worried about a recession while you price in potential recession because of the tariffs, right? You're worried about inflation, or you're worried about recession because they're not telling you recession, and then they're pricing it in right in front of your eyes. That's pretty much what this is. It's forward looking, right? It is, the market likes to do things and look into the future. Why do you think the stocks that you're looking at, look at their PE ratios? Why are those so high? Well, it's because they give guidance and then people make decisions. So that's a big problem too. If you cut rates right now after saying that statement right here, the where the fuck? Yeah, that simple statement, pretty much they're saying there's risk of higher unemployment, higher inflation. They're literally telling you inflation could go up. There's risk of that. And you're saying, I want a rate cut. Okay, so you want really fucking high inflation is what you're saying by saying that. Which means, yeah, sometimes you can see a good reaction from stocks, but would you see that good reaction now? Probably not, because the whole reason we've been downturning is because we've gotten no news with tariffs. You've gotten a little cookie last night, but we don't even know if that's real. And then two, everyone's scared of recession. Scared of recession. I think you would see a bad reaction to a rate cut. I genuinely do. At least right now, maybe not later. Yeah, just trying to give you a good explanation of like, but do you see how focusing on that for the entire last 3 minutes, has that helped us? No. It really hasn't. He's getting through his opening statement.
Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary
we can
pressures.
just listen. I'll try not to talk much unless I see it as important.
From its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal.
He is getting through his opening statement. I will chime in if I see something as interesting. Sometimes I just like to take notes and talk about it after. And then watch if I start to draw things without talking, just pay attention to the drawings a little bit, okay? As of right now, the drawing to look for is rejection or take it back and then try to get to here. Whipsaw, whip it.
Larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment.
Make sure you're live. He's getting through the statement now. Make sure to hit that live button.
A one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, the question portion is where we really start to pay attention.
Steve Leisman,
We're starting to break through that.
Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. You know, I think, if you look where we are today, we have an economy that, if you look through, you know, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
John L.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So,
okay, brief moment. He's gonna look back just right here. we are still at that inflection point where we got to figure out, do we need to test this low again, or are we going to rip?
So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
You do have Jerome Powell using the fun word uncertainty. If you are looking for certainty from Jerome Powell, you most likely will not get certainty from him.
Employment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out, and
You
what
have broken the
economic
downside,
implications
suggesting
are
that
for
scenario
employment,
one of the
for-
retest
and
of
for,
down in here can take place.
inflation.
Crazy
I
things can
couldn't
happen down here,
confidently say,
right?
That I know
Why
what the,
don't
what the
DJ? Crazy
appropriate
things can
path will
happen right
be.
here at this point.
So following on that, just
but
so then
now
how
you're seeing
does
more
President
likelihood of
Trump calling
this.
on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Gap
Doesn't
still
affect
below.
our doing our job at all.
I'll mark
So,
it off.
we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If
That's
so,
a
do you
pretty
have
good
any sense
test.
of by how,
Into the
by
very
how
top.
much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not really not in the data yet.
Yeah,
So
see how crazy things happen.
and that tells me
Tapped
more than
into
my
here.
intuition, because I think it's obvious actually that the right thing for us to do is we're in a good
Weirdly
place.
enough,
Our
that's a good
policy's
sign.
in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot
This guy's got a gotcha.
negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact
MP, we can talk about that in a moment.
QE,
just give me one sec.
QE, and
I'll make a note of it.
And went beyond the narrow confines of your mandate.
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique
some weird things can happen in that area.
You've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question.
Dixie might attempt to make a comeback here if he gets rid of the flagging.
Some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down?
Ooh, some strength. See if we can get through that 560.
We never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality
there's your break
of the country as we look at.
Just note that we flipped this fast.
Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Jolene. Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, their concerns.
Scenario 2 coming into play,
higher
possibly?
Prices may be coming, or things like that. So people they're worried now about inflation. They're worried about the, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so
See, it
we're
hasn't
gonna be
hit.
looking
He's
at
talking
the,
about
at
it right
the-
now.
Not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do.
Jerome Powell just talking about what we were talking about a moment ago about why cutting rates right now is not the best idea with all the uncertainty towards tariffs and inflation with the tariffs.
Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
All right, Gossip
Hi,
Girl.
thank you.
Ask
Chris
real
Rugaber,
questions.
Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't
Gap
do
left behind. Watch for this
a
gap to
summary of
get filled
economic
at some
projections at every
point.
meeting, as you know. We
Maybe
do it
even
every other
today.
meeting, and so this was the
Probably
meeting when
today.
we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see,
5 minutes is
how
close to
things
going
play out
positive.
before we make those decisions.
First retest done.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the 2 goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Dollar still trying to do that
Hi,
comeback.
Victoria Guido with
Now at
Politico.
0.3.
I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. they're going to do, we take what they do as a given and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path.
Oh, Freudian slip.
It's on Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see.
Very correct from Tony to mention the lower high. This is where you can have more of an attempt to fill the gap down at 554.
Also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
Yeah, today it is a coin flip, Tony, today especially.
Talks that we're in any way involved in, so I really can't comment directly on them. But what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have a different, we're in a new phase where it seems to be we're entering a new phase where the administration is entering into beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imports, imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to.
He's talking about the process. I thought maybe people would celebrate him saying them having talks, but people know better now. We're still looking if this gap down here can get filled, and then we're looking for the failed retest probably down in here. Actually, you're looking for the failed retest here probably. That would be gap fill. Once you start to lose that, once you start to lose this, obviously it starts to really open the door to here. As of right now, this can be an inflection point. See if we get a rip from it. But if we don't get a rip from here, it's very likely to do this. I don't think it's worth a trade though.
Confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects?
Because if you do it
Are
and you're
worried
wrong, you
that
can
the soft
fuck
data
stuff
might
up
be some
way
sort of
worse.
false warning?
No, I
Can.
mean, look at the state of the economy. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is, we're not sure what the right thing will be. You know, there should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, you know, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
You know, I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, you know, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data. And we have seen in the shipping data that imports from China
Does
into
not want to
Los
close
Angeles
below there, man.
have plunged,
on this
and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
They would raise rates.
I mean, we don't have, you know, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. You know, what we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But you know, we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And
dollar's snapping. Remember what we said about the dollar?
Right now we see inflation, you know, kind of moving sideways at a fairly low level.
Trying to take back the 5.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, you know, trying to navigate this tricky passage we're in right now, trying to make the right decisions. You know, we want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
That's a worse bar. We look for potentially the test here now.
Chair Powell, Jennifer Schonberger with Yahoo Finance.
If you fail this,
public records
you
of
break
your
this,
schedule so far this
a lot of
year
this is
show
opening
no
up.
meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not. I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
You know, You know, I think once you have a direction, a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
All right, so he just like cut that damn thing off. He was like, "Nah, no more of this shit. Nah, I'm getting asked about my feelings and my friendships and blah 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 blah." A lot of that was things we already kind of know. They can't react in this scenario. Just like you're probably having questions of like, "Hey, should I invest that $100,000 that I have sitting on the side or not?" And you're trying to read into things in the news, read into things in the charts and go, I don't know. It's a little uncertain with what I've seen for the past few days. He's been touting that for months and months, and now he has an excuse to double down on it. The one thing I was going to talk about, though, was the statement of the 3 push lower. In this scenario, wouldn't a 5 push lower be worse, right? And you violated that here. So the way that you get the inclination that we're going to make another move down is by losing this. That's why we talk about this area so much. That's how you get your 3 push down again, right? Now you do have a 3 push up, but you don't know if in the grand scheme of things, is this 1? You know, I think you would really consider that. Now, on the 2 hour, you could probably say 1, 2, 3, but 2 hours like to do this a lot of the time. So I'm not some Elliott wave guy. I'm really not. I understand it probably basically. For the most part for today, you can see if we're going to hit those lows based on price action. I'm still worried that this gap is here. Still not liking that. That's how I would say it right now. It's like, if that is going to happen, you're probably going to be able to spot it in a 2 hour chart. In a 2 hour chart. You most likely will be able to spot it. You want to know the first inclination of the probabilities really opening up for a downside retest. You go tag 545. You see this stop, whatever this market wants to do right now in May. In May, you go hit 545. You want to see a retest of those lows, see if we're priced in with all the uncertainty, all the confusion. All right, hit 545 by the end of the month. Then you're going to roll up, probably get some kind of little short squeeze for a few days, and then you'll roll that thing. You don't have to be calling tops, especially in bullish context here on the macro scale. Because whether you like it or not, this area is still a bull area, but the bears are putting up a great fight. What does a great fight between bulls and bears do? Why should you pay attention to 545 so seriously? What does this do? What does this do? Well, just this. Come on, you guys know this. What is this doing? What is this doing? How much money do you think is being risked in this zone? Just in this 30-minute zone for the last couple sessions. What do you think it's doing? It's coiling. That's a good word. It's prepping. It's building liquidity. It's building liquidity to do what? See something like this or see something like this? Weirdly enough, the bearish context comes here. This is where you start to really open up that part 2 of the recession. That's where you price in more, right? But all we've done so far is coil, seen a reaction, and came back into that zone. You have not seen direction from this area yet, but you are seriously held up here. Weirdly enough, this is very bad, I think, for bulls, considering where we're at. But this is also better than seeing this break down completely and then get that experience roll. That's how you get to 545. So the fact that this wick came in is a good thing. It's just not, you're not seeing the reaction right away. So right now, what are you doing? You're building for a big move. You're building for a big move that's going to be continuation as we go positive, as we continue to hold that line. We keep seeing these wicks down, but look at this. We're holding it. Just right on the brink of it. You are on it, dude. Now, the only thing that's fearful for me is I really think at some point, maybe even before we run, if before we run, I would rather us do this before we run, is you see this wick come down like that and then shoot back up. I would like to see that. So this isn't unfinished business for sometime tomorrow. Because if you see boom all of a sudden, then you come back down to that zone, you can come back down to reach these levels, which I think you're going to see some kind of pullback. Even if you miss out on, say, some kind of big move in either direction, you're going to get a bounce or you're going to get a pullback, right? We're not trying to be FOMO-y. Today is a very difficult day to trade. But that's how I would read into it right now. So I'm in agreement with you, whoever brought up the 3-wave down. I'm disagreeing in the fact that is that door open fully right now? I think you can see under the door, you can see the lights are on. I don't think that door has fully opened yet until I see the test of 545 or even 550, right? 550 can tell us a lot too. If we see a rip from 550 after pulling back down there, which I think we will retest 550 either late May or like sometime in the next few weeks for May, or we'll do it early June, maybe. Oh, sorry, type. At MP. Oh, yeah, that's right. It was MP. And I don't think they're wrong to bring that up at all. Okay, so now we've actually got the closing. So that kind of adds some credibility to at least filling the gap, which means now we got the test in here, right? We see how we came down into here. Now you're very likely to see what happens at this gap, aka test into where. Well, these are tiny time frames. That's why this is annoying for me. I don't like to do tiny time frames. Now you're going to test into here. If you lose that, it's very likely you're going to test into here again. You lose that, well, you're going to probably see that spike down. See if we can catch that gap fill. So there you go. Now you actually have the closing. That tells you should come down and fill this gap right now. I'd be surprised if we didn't. And then this is going to be the big inflection point of, do we see good things from here? Yeah, this'll be a big point if we're able to get there. I think we should. Made mine and I'm out. Good job, Mr. Joshua. That's what's up. One thing to consider here, and why is this so important right now? I mean, look at your MACD. Even your MACD is telling you it's important right now. Your RSI is already saying, "Ooh, man, the strength's getting weak here." Your MACD is like, "Hey, I'll give it another 5 minutes," and then price action is like, "Well, let's just go grab that gap. Let's go grab the buyers from down here if we can." And you left another gap right here. So there you go. Let's see. Come on, you should fill this. Come on, you should cut it, really. There you go. Cut it. Touch the bottom. And now we find out if we can hold this. Part of me is leaning towards either way. I would like to see either way. I would be perfectly fine seeing this. I would be perfectly fine seeing this gain support in this area and start doing that. We'll see. Seems like we want to really shut it down for the time being. Trump said, best announcement ever coming. Okay, so what is it? Is he with NBA players this time? If you really want to, you day traders, you should probably learn this from someone who day trades more, but I like to do it on bigger time frames. There you go. Filled the gap, you cut it, went back down into the wicks. This is all good. Yeah, he might have said. I think someone did say it's not trade related. I was wondering if that was FIFA yesterday. I have no idea. Yeah, people were shouting that this morning too, just to be aware. Like he said, it has nothing to do with trade. So big announcement. Truth Social will now only speak the truth. Only speak Donald Trump truth. Big announcement. Alrighty. Let's see if anyone interesting is talking now. You have a lot of Fed speakers coming out. Okay. Gotta change one thing around. All right. We are starting to break. I don't want to say break yet. It's just we got to see if this actually breaks here. The best case scenario for a fake out is we leave the gap behind. Where we do that, and sorry, I was just looking at the options real quick. Where we do that is right now, right here. Or you get these people excited and say, yeah, we're going down there, buddy. And then we use this block again. Right? That's what it seems like to me at this point. I don't think anything we heard was extensively new bearish. People were coming out, and you probably feel uncertain. Most people feel uncertain. Most people feel that way. I think that he more so just showed like, hey, I'm uncertain too, so I'm not going to react. The best thing I can do for you guys is not react right now, and I actually agree with him in this statement. Ah, your damn cash account got you. That's all right. Maybe it saved you from doing something stupid right now. Who knows? Midway of the move, we break here. We go back to the lows. I'd potentially agree with that, right? We break anything. Actually, midway here, probably you break anything below the middle here, like right where you're stopping is where you kind of have to, or else you're going to go down to these lows. And then the bears will get excited for possibility of the gap fill. Definitely on the table with this look. But more so, we could just make that support level right here, see if we're able to keep it. Maybe we see the wick. Maybe you see a wick like that. I'm still inclined to look at the market with a bullish tilt, even all the way down towards 540 or 550. My apologies, 550. It's more looking at the reaction. If we get to 550, it's looking at the reaction of, hey, do we see that come up? And do we see that drop again? I like it, not having. No, everyone's contributing. It's been great. Yeah, 2 hours during squeezes really like the 5 push. So I think a 3 push here is what causes downside. If this actually, I'm not Elliott Wave guy really, but if it would calculate out to that, you would be like, all right, well, what do I need to see for that to be proven? I think the inflection point here is just 550, 545. What are you getting to? What can motivate people to buy just in general, John? Just in general, what could cause people to buy would be certainty. Even knowing the bad thing. Think of it this way. Is it scarier in the middle of the night, you hear a noise. You have no idea what the noise is. And you go downstairs, you flip the lights on, and you go, "Oh my gosh, it's a robber." You know it's some 6-foot dude just like trying to take your TV. You know. Okay, now same type of deal, new situation. You go downstairs, you hear a noise, you go downstairs, it's pitch black. You flip the light, it doesn't come on. It doesn't come on. And you hear more little noises, right? Those noises don't stop. You're hearing the noise, you're going, "Oh shit, oh shit." Which situation do you think your brain is going to fire off more for? Right? Which situation is going to make your brain just fire off and be like, "Oh, risk, 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 risk"? It's the darkness, right? The unknown, well, I guess it would be the unknown with the inability to know is scarier than the unknown that we could potentially flip the lights on. Stock crash before April 4th tariff. Yeah, so people are going to know things before you do, John. That's kind of the whole job here, weirdly enough. People will always know before you do. This is why news is late. People start pricing in tariffs before tariffs even started. Right? And then it actually was worse. They didn't even expect it to be that bad. That's why you got the second leg down. But that gave you the 3 push. You get a 5 push, you're potentially in bear market. Be right back. 2 seconds. Give me like 2 minutes here. I'll be right back. Still in this area with the ability to come down to this area, with the ability to wick down to here. And then we'll look for some stuff going on, but I don't see anything absolutely terrible just yet. I'll come back in a minute here and we'll see. 2 seconds. All right, what happened? What happened? I'm interested in Apple. You can see whatever the market does here, but interested in Apple. Very nice here for Apple, actually. Apple's suggesting, watch out, I could see a move. 2 hour, relatively negative, right? This is a good example. Pretty good example here. Why you don't want the market to get to those critical levels, right? That's why. I don't know if you even got gap fill here, so you might have one more push down. 2 hours suggesting it's going to make an attempt to at least test the 5, if not, take it back. That would be very, very nice for Apple. This means watch out. If Apple is saying things, I like to listen, okay? I like to listen if Apple's saying stuff. We can do 5 minute though. End of the day stream, you know, we can be degens together for a little bit. Sorry if you're 0 DTE. They absolutely crushed almost both directions unless you were perfect on timing. Okay. Vic so far trying to go negative. All right, so far good test here, able to get back into the zone. We want to see this trend here. Actually, this is great. Technically higher than previous here. That's good. What I want to see now is I need to see a new high here. You see a new high here would be great. Remember that we were talking about 580 potential by the end of the week, but over on Twitter, I did say that this up here seems more likely for May 16th, next Friday. Let's see if we figure out. We'll see if we figure our shit out, but for the most part, okay. All right, let's see. Give it a go, Bulls. Let's see what happens. What is this, man? Jesus loves me. Hey, that's good. Hey, look at that. We see the break above. Good start. Wick below, we don't want to see. We want to see it close above that, personally. Wicks are good hints, but a new high, a new high, a new high, a new high, a new high. Technically, I want it above this. Technically, we want this to break out. If it doesn't look back, right? If we don't look back, watch for the resistance, right? We could take off now. Just I would expect a pullback at some point. Let's see here. Oh, we got a thing going on here. All right, let's see. Let's see if holding through the pain works out. Here we go. Target 566. 565, somewhere in here. That's your first one. is about 564. Yeah, 564.50 would be the first one. If you're lucky, you get to here. Man, we'll see. That's a pretty damn steep ass move right there. That's pretty steep. Yeah, look at these. I'm gonna see if I need to reposition after this. Because I want to make sure to have that 571 for the pump next week. Damn. Just know it's still up and down and all around. You're looking for potentially 1 minute. We'll be looking for a retest into here, but new high, very good. Talking about the China talks in Switzerland, yeah. I don't know about the China talks in Switzerland. I thought there was something to do with shit. What was it? China and it wasn't Russia or some shit, was it? Yeah, you got to be quick with it. Seems like a lot of things got repriced or something here. Let's go see. If we use the top of the zone now, if we get the full move, 566.32, that might be a little greedy. Right up here is greedy. I think I like 565 for a tail here, but you've already got one. We'll see if we can make it to 565. Yeah, it's a pretty good bullish move. You're kind of looking, really, if you're looking at this, you're looking here, 564.80. But days like today, especially if you're trying to zero DTE, you gotta realize when you just take your money and kind of bolt. Now you're looking for retests. We only got 14 minutes left. Wow. That is a boom and a half. Pretty solid. New wick in. We beat this. Remember what we said today? If we beat this today, that's a very good sign. This is a very good sign. Look at this. Bam, you beat it. That's pretty damn good. Yeah, that's not bad. Now we got to see. It's going to be very hard to break down. Like, it's going to be pretty damn difficult to break down now. You could test back into this. Below that, you now have this, which kind of spreads out a little bit, right? Kind of spread out. You have two pieces in here, and then you have this at the end of it all. So, theory here would be try to continue. See that maybe produce in the morning. Possible more upside. Get people kind of baited in. Sell it off after some kind of upward hour pump in the morning. Sell it off. Turn down to retest aggressively to get people bearish. And then you hear Basent and maybe give you some talk. And that would be crazy. This is kind of good though. Don't think it'll come down. You think just closes up? The technicals, the price action would agree with you. The price action says very difficult to break down now. At least for a 5-minute chart, guys. Trump announcement any moment. It sells off right when I say that. Hey, it can, market can do what the market wants to do. Just because it's difficult to go down doesn't mean it can't go down, right? It's just I like to stick with the probabilities right now, and they're pointing up now. We did all our work in here. We talked about this little area. We talked about this area right here. We saw that touch the top of that. That's good. You came into here pretty deep, honestly. That was pretty deep. And now we're just raising it, raising it, raising it. Now you want to see that extend. You want to see that extend. That'd be best case. I think Ari just hit her head or something. Breaking, Trump to rescind global chip curbs amid AI restrictions debate. Percent says China negotiations to start Saturday. Ooh, not tomorrow. I don't think you're ever out of the woods on a 5-minute chart. I think that you're seeing good signs, but yeah, I don't think you can just say, oh, it's going to be dandy always. Days like today, you got to be quick, but there's just tons of things you have to break through. It's a 5-minute chart, though. Okay, we're breaking through the center. So the first one failed. Maybe we'll reach down to the second. Well, the first one didn't fully fail, right? Didn't fully fail yet. Price 10% said in the morning, so the big drop. Percent Saturday talks are beginning for talks, not advanced discussions. Hey, at least he's being honest. Oh God, she's chasing her around. Oh, by the way, tonight I don't think I'll be able to make a YouTube video. We just have things going on. If you're part of Patreon, I'll try my best to do an update video. If I can't, because on Patreon we can do it pretty quick. But for tonight, I'll post the daily expected moves at the least to Patreon. All right, so far, further breakdown than I would like to have seen, but volatility should be relatively pumping back and forth. Yeah, pumping back and forth here. Yeah, we don't have to be done. Oh, there you go. You touched into the top of this wick here. Perfect. Let's see if that remains good. Now you're kind of just sitting. Oh, shoot. I think the dogs were up there. I sold the rumor, if that counts. Yeah, it's nothing bad, Ta. I just want to help out. With all these live streams, it does put a heavy burden on wifey. So I want to be able to give her, a solid hour break. She needs it. She needs it. And during her hour break, you know what her break is? Cooking. It's like, come on. She doesn't even really get a full break, so. I think as we're reading into this, I think the more obvious play will be potential run-up into options expiration. Hopefully you hear people talking about that. Options expiration, very good to see the trend before options expiration. Make sure everything remains cool the week before. And then if things just turn up, they can turn up aggressively. I think you'll still get an opportunity if you're not in it. I think you could get an opportunity maybe Friday, maybe Tuesday, if the opportunity forms on Monday with a sell. But if he's talking to China on Saturday, just be aware people might price that in early. We'll see if they price that in for some upside. Very nice. 7 minutes left, and then we'll see what's going to happen here. We are, as of right now, kind of seeing that back and forth. See what happens. Just waiting for a Trump Powell comment. Yeah, 5-minute charts are rough, man. Blocks within blocks within blocks. I was thinking 550 on SPY, but now I'm thinking this is the pullback. I think I see 550 more just a little, maybe after, sometime after options expiration if we're going to do it. Really, if we're going to remain healthy in this market for a long period of time, you probably wouldn't want that right now. You'd probably want it all in one swoop. We see something else bad down the line, you know, maybe towards closer to the fall, but I don't know, trying to time it out in my head, kind of difficult. I need to just make a video about it. Well, it's going to look fishy today. Anything can be a trap today. Anything can be a trap today because you're on Fed day, you're on FOMC day. So this is where market makers, Wall Street, they love retail because retail will make big bets in both directions and react improperly at the wrong time, right? Chasing to get this 1 point maybe to 565, chasing to get the gap fill, and then they just rip it away, right? I think that today, I think FOMC days, yeah, you've probably heard me say this before, I'd rather not have them. I would rather not have these days. I do not think it brings clarity. I don't think it brings any clarity to the market whatsoever. The only time we should be hearing from the Fed is, you know, maybe like once or twice a year, and let the market do what the market wants to do. Dominate the Chinese division. Those percent swings. He's a switch hitter. That's nice. Made 3 cents both ways. Woo! Yeah, too many big swings. That's why a lot of people would say, you let the market. A lot of people would do this. You let the market figure out direction, right? Let's say it's down. And then you see this, and then you see another down, they would more so jump in here. They would wait for all of this stuff to start to calm down. You've built that liquidity that whatever move we make is most likely to continue, even if you see a mean drop. So what they'll wait for is this high to be broken, right? They'll be patient, say, oh, we broke that. We come back down into it. And then this is where they make the decision to try to get to that 580, right? That would be the level-headed non-degens. And I think that's the more probable situation, by the way. I always leaving open that gap, right? Always aware of the gap, but we can see from the 30 minutes just nonsense today. That's why today sucks. You get everyone making bets in both directions, and Wall Street and market makers just rip money away from everyone. So that's why if you wanted a day to say you're a full-time trader or you want to be one, treat today as potentially FOMC days. You could literally treat them as a half day. I hear people saying Amazon puts and Amazon calls right now. What's going on? That's a 5-minute. Wow, you are in a chop fest here. Look at this chart right now, man. Rip down, flag with a few crazy reactions and a gap in it. Gap down, island that, almost island this, gap down, make a small divergence, pop up. Getting back above the 5 is good, right? It's not necessarily bearish. 2-hour divergence is there. How do we fail this? Boom, boom. How do you take this thing back? How do you really get back to good with this? You want to at least get a tag of this, then you have a chance. But you really want to get above this. 197.80. Yeah, a lot can happen here, but if the 2-hour curls up in positive territory, that way. If the 30-minute fails now and you start to lose this, well, you'd be looking for down here probably. That's how I see it right now. We'll see. Let's watch the last 2 minutes here. Let's see that volume pump, right? You guys like volume. A lot of people bringing up volume. Hey, you have volume here. Even when the market was down. That's a good sign, too. I didn't lose the money I thought I would on video puts. SoFi is showing big squeeze to the upside. Volume is there for sure. Yeah, we see that. This volume in the last, 30 seconds here. You should see this bar overtake this one. Not bad. Not bad. Rip and slip tomorrow. I kind of agree with that. I think you have things to, if you see the big move tomorrow morning, you're going to get a retrace. It would tell us, you know, where it wants to stop is probably going to be daily expected move. Watch for the retrace. I do think you'll get opportunity to get in before this potential OPEX push. We'll find out. I don't, you know, a lot of these events, you know, people think you got to be in, you got to be in, you got to be in, and they don't realize, like, you know, they don't realize that funky things happen with the options here. I wouldn't even be surprised if someone said, I took an option here and it really wasn't that much value here. I wouldn't be surprised at all. But it can be. Very good timing, it can be. But, like, maybe buying here, and then we do this, that's enough to just, like, burn you for a second. Yeah, so we'll see. IYC Man says, a rug pull starts tomorrow. Well, you did leave up a gap and stuff like that. Look at that volume push at the end of the day. Woo, woo. I would more so be inclined to upside. This makes me inclined to upside, right? We said if you see this beaten today, you make that new high over here, that's a good sign. If the market now wants to dip lower, we haven't really fully seen that 30-minute breakout moment, so you're always at a little bit of risk as you're still negative. But we got to see tomorrow. And I'll get to, once again, won't be able to make a video tonight, but I will be making the daily expected moves and posting those to Patreon. If I have like 5 minutes, I can go over the SPY real quick on Patreon maybe. So Patreon's down there in the description if you want to join, if you want daily expected moves early. If you're trading overnight, it can maybe help a little bit. SPX, I can't really make things for the ES. Actually, I probably could, now that I think about it. But for the time being, we haven't necessarily seen direction chosen. You've seen the reaction down, the reaction up. And the fact that you saw this, the fact that you could have seen it the other way, it doesn't matter. That just tells you that Wall Street was stealing money all day. Wall Street in the last 2 hours was just stealing money. That's what's happening here. Right when retail, you know, they see a bunch of puts come in, they make them worthless. Right when they sell those and people start to go in calls, they pull it down. That's why this day is very, very difficult to trade. But you can be successful. You just got to be able to buy fear, pretty much. Buy fear and use the good position size. So no video tonight. We'll be posting those moves out to Patreon. And tomorrow morning, we still will be live in the morning on YouTube. We still will be live in the afternoon on YouTube. And tomorrow night, we will have a video, and I will be putting out the daily expected moves for Friday. Okay, daily expected moves for all these stocks over here. Right, so if you have expiration for Friday, that should help you out a lot. So we're just watching. if I really wanted to be patient, I could just sit and let the market do whatever and watch for the 2-hour swing and then ride that thing potentially to 580. I think 580 next week is pretty damn good. We'll see. We got to make sure things remain good, but maybe those China talks over the weekend, hopefully those go well. But we'll hop back into this stuff in the morning, and we'll look at what price is telling us from there. As of right now, the best thing that this could do is see a good move and then use this as support, with the understanding that if we create a gap here, right, we could fill that gap, retest into here, and then turn back to the upside as well, right? So we're looking at bullish things because we're in overall bullish context still. We have not seen it break below 550 yet. So I think that's the best we can do for today. Thank you guys so much for being here today. Thank you for liking, subscribing. You guys are fantastic, and I hope that you guys have a great night, and you guys are really paying attention to your risks, understanding that being patient on a day like FOMC is a very good thing, and how they, you see it in real time here, right? When we sit and watch it together, you really see it in real time, like, oh, bad for no reason. Okay, good for no reason. And then the news will tell you why it's bad, then tell you why it's good right after it happens, right? It's always going to be lagging behind. But hope you guys have a good one. Peace out. Later, guys. Oh, yeah, we got AMC earnings. We'll see what that does to the market, right? AMC earnings. Hard to be bearish, or hard to be bullish, actually, on AMC earnings like ever, but we'll see. GME, nice little turnaround. But notice this, once again, not able to see great upside and really looking like what? Well, actually kind of flaggy right here. So we'll see if it can remain in the zone for now. But as of right now, rejecting from below here is a bad thing. So we'll see what happens. Thank you guys. Have a good night. I will see you guys in the morning. Peace out.